we'll be doing a lot of top-down analysis, daily top-down analysis, and trade tendencies, and stay locked in every morning. You'll get something that might make you some money in the course of the day. Okay, let's break it down. Let me go to the very high time frame to bring clarity. Yeah. Um. Subsequently, okay. Let me come down to a daily time frame before going up there. Subsequently, price did the rally and came back here to take out an inducement that happened in the 4 hours time frame. Got a base, and like we are saying here, price valued up, and price has taken out the high, but price has not completed the range of this rally up, which is a beautiful thing. But then, as we're waiting for price to complete the range, there is a possibility of price running down to this base, this base, or at the same time forming an inducement at this level and continue, come back later on, take out the inducement and fire down to complete the range of this general trade that has formed in this space. Now, like, why will price come back here? It's very simple. Structures. Price took out a break of structure here, although in the smaller trend it was an external range liquidity, but in the bigger charts, like it has formed here, it is called it's a smaller structure in a bigger structure. Price took out this structure, give us a point of interest here. You can also call it liquidity. So there's a high chance that because of price took out this high, price might come here to take out this liquidity before firing down. At the same time, price might form an inducement if there is buy pressure that holds price from taking out this liquidity that is outlined in this spot. But whichever the case, let's go to a smaller time frame to get clarity on existing price. Now, mind you that we are looking at price to come down or give us an inducement. So that should be on your mind. While drawing your storyline, let's point out the highest high here, which is this point I pointed out. Now look at price on the smaller time frame. This is good to be specific. On the smaller time frame, something interests us here. Let me bring it down to 1 hour so you get better clarity. There is a break of structure here. Price takes out liquidity at this point. Price takes out liquidity at this point. Order flow, price comes back after taking out this liquidity here. Price continues a new trend. Now mind you, after price ran this trend, price broke structures at this point. Price broke structures at this point. So normally after a break of structure, we're expecting a pullback. Price didn't pull back, price rallied up, formed a point of interest here. I also call it an inducement in this case, and rallied up. Now mind you, price came back, took out this point of interest, drew, came back to complete the 50% range on this stretch. So two things that we're expecting here. It's pretty simple. Either price values up because of this smaller trend and takes out this high, or price rallies back up to get us a 50% range or more on this environment before coming down in line with the higher time frames. So if with confirmations on from a smaller time frame, you added a trade somewhere around here, your real take profit should be at the 50% range or the 62% range, as you see here, because there's a high chance that price will either reverse from this point or continue from that same point. So trade expectation here is pretty simple. From here to here, and trend continuation down, or from here to here and a trend continuation upwards. So let's see how it goes. That's it for today, guys. Have a blessed and profitable day, and take care of yourself.